Good morning. You're watching The Market right here on ET Now, and at last it was worth the wait, although it rained once again last evening. But IPL 2023 final, which was supposed to end on May 20th, finally finished last night, and MS Dhoni's Chennai Super Kings clinched a thriller for a record equaling fifth IPL title. With last night's win, CSK, by the way, has completed the task in the last ball against defending champions Gujarat Titans at a packed Narendra Modi Stadium in Ahmedabad, what could turn out to be the legendary Mahendra Singh Dhoni's final outing in the T20 League. But Nikunj, since you've been following IPL more this time than any of us, he says, I'll be back.
Yep.
Like Arnold Schwarzenegger.
I'll be back, and that's Dhoni for you. You know, I mean, just if you have to draw a parallel, CSK and Indian markets, well, there is a parallel, which is that form is temporary, class is permanent, right? That's what happened with Indian markets in 2022, which is that we went through a bad form because foreign institutional investors were selling, there were inflation concerns, there were valuation concerns. But the class is that the economy is growing. It is growing at a rapid pace. We are the envy of the world right now. Inflation has peaked out. Valuations are not that attractive. You know, the finance minister was in town last evening, and you know, there was a small editors conference where we did got a window from her, and the way things are progressing in terms of what the economic assumptions were, how inflation has come down, how forex reserve has stabilized on a macro front. You know, she was not worried. She was mighty excited. She was mighty excited. And then again, you know, every time when you meet anybody, a senior government minister, you would always like to understand that, okay, elections around the corner, what is going to be the policy given that Karnataka, they've had a setback. And she was absolutely clear that there is going to be no change in terms of government policy, and you cannot compare state elections with what the central elections are.
Okay, looking at the trader's screen then this morning, there were no US equity markets overnight, so it's pretty flat across the global screen. Net flows continue to be positive. It was a rip-roaring buy figure from the FIIs yesterday as well, which, by the way, we managed to clock a fresh high on the Nifty Bank and now closing in on a fresh all-time high on the Nifty as well. And the F&O activity continues with a fresh long bias. So I don't think, looking at the screen right now, there's any reason to complain.
Yeah, so the action now shifts from Bank Nifty to the Nifty.
Yeah.
You know, the Bank Nifty has made a new all-time high. When will Nifty make a new all-time high? And frankly, that's not like that is not like a distance away. If anyone is making an assumption that Nifty sooner than later will be making a new high, I think that's a very fair assumption to make, because the setup or the setting on the table is favoring that. See, what really matters in the short term? Sentiment and direction. The sentiment is bullish and the momentum is strong. Flows are easy to understand, which is that foreign institutional investors are buying, domestic institutional investors are not selling. So right now there are no large institutional sellers in the market. And third is the macro and the earnings. And macros have stabilized, earnings are looking better. Now you may argue and say that what is next in the month of June and what will take markets higher from here convincingly. I think right now there are no triggers in the system, so markets would be moving higher because of liquidity and also the re-rating which is happening in India. And I think that is not over yet. So there is no point in preempting a fall. There is no point in trying to call a market top. There is no point in trying to assume that this is it in terms of the summer rally of 2023. We must recognize that these rallies are very sharp, and they may extend for a couple of weeks and for a few months before they peak out. See, on every front, you know, Aisha, all the concerns are simply getting addressed. Monsoon, looks like we are in for a normal monsoon. Adani, sell-off, that's got addressed. Inflation concern, interest rate. There are a lot of factors which, let's say, 3 months ago were muddling us back. You know, the water was looking very muddy. The water was looking very turbulent. I think now the water is clear, and within that, if you're planning to sail, well, summer is the time to sail.
But Nikunj, having said that, despite the fact that, you know, we're talking about all-time highs at a time like this, a lot of the heavyweights are underperforming. For instance, from the the 1st of December, Reliance Industries down about 8%, HDFC Bank flat, Infi, TCS, etc.
Now that's the tricky part, Avanne, if you frankly add up the weightage of a Reliance, HDFC Bank and an Infosys, it's about 20%. 20% makes it about, the 20% weightage, that's about 1/5 of the Nifty, which frankly has not participated when markets are at an all-time high. And, I can throw in State Bank of India in that as well and talk about another banking heavyweight which has just not participated. So it's interesting that Nifty has come back to an all-time high or almost to an all-time high without Reliance, without HDFC Bank and without Infosys. I would look at this as an opportunity rather than as a concern, because when flows are so strong, this kind of a stark underperformance is unlikely to continue, because a lot of flows which come into India are also marked via the ETFs, which essentially map the benchmark. Since we are in a bullish group, since we are in economic recovery space, Infosys has sold off, HDFC Bank concerns are getting HDFC and HDFC Bank merger concerns are getting addressed. Somewhere Reliance, I think, has got things going in the right direction for the business cycle per se, as they're nearing the end of the capex cycle. I think the markets will recognize that. I don't see a problem with these four stocks that why they should underperform. I think it's just that lion amount of money is moved into an ITC or lion amount of money is moved into some other sectors.
So not looking at it as a concern when it comes to some of those large caps. But let's talk about the other asset classes as well and put the spotlight on the rupee to the US dollar as well as the Bitcoin trend against the US dollar. And yes, as we have seen, the prevailing strength in the US dollar, that potentially could continue to keep the rupee lower, as right now we are hovering at those levels of about 81, 82 to the greenback. And you've also got cryptocurrency or the Bitcoin prices, they have risen above 27,900. Clearly, it's also optimism around the US debt ceiling deal that seems to be fueling that move, Nikunj.
Yeah, this is a bit of a concern if you frankly ask me, that ideally the rupee should have strengthened much more. Look, it is not at an all-time low. That's fair. But, with this kind of flows which are coming back from the FII frontier, FDI deals are still on a daily basis, things are getting stitched up even in the PE market. I was hoping that the rupee would be closer to 80.5 rather than 81.2. So the dollar index is also strengthening. It's not at 101, it's now 104, 105. It's, nearing 104, 105. So that becomes this, that becomes this fly in the ointment, or if I may use the word chink in the armor, which is that crude is down, but on the currency front, given where the dollar index is, the near-term positioning of the market, if anything has to really, cause that selling reversal, I think it would perhaps be the dollar index and what's happening there.
But the other important and very important factor for our markets, Nikunj, is also crude, right? What's that construct looking like?
So, Aisha, the natural direction of crude is looking weak. And you just think through it that OPEC has actually cut production. And if OPEC has cut production, despite that, the demand actually for crude has not come back. We are entering into the summer month, and in the summer month, typically, you will actually see a decline in the crude demand. That is how historically things have moved. We are reaching that period where the crude demand globally actually should come down. The China consumption has not been as large as what everybody anticipated and expected. And when it comes to India, frankly, this war has been a blessing in the disguise indirectly, because we were able to buy cheap crude from Russia, and that rupee trade actually has worked like a charm for India. So India actually has benefited disproportionately at a time when world was buying crude at higher levels. India was getting at a discount, largely because of the foreign relationships or the kind of gateway which was opened with Russia. Now I think, Aisha, the natural direction for crude is lower. Crude is a function of demand. Demand is going to be significantly lower. Crude is a function of where the future innovation is happening. It is moving towards solar. It is moving towards EV. So the direction demand for crude is lower. And you're reaching the threshold where OPEC also knows that beyond a point you cannot cut production, because if you keep on cutting production, it will impact your profitability. So Russia crude, which everyone thought will be off the market, it is actually coming to a country like India. OPEC, even though they claimed that demand has normalized, it actually is not, because if they had to, then why have they cut production? So I think directionally crude is weak. Sunil Singhania spoke about levels of 65, 70. Chris Wood is of the view that, look, I got crude call wrong. In fact, crude should be lower. The swing factor is still China, and the Chinese demand is not as strong as what everybody thought. I mean, I think it was your forward on one of the WhatsApp groups which said that there is a new virus variant which has come to China.
Yeah.
Now you think about it. I mean, every time we think China is coming back, something happens there.
Yeah, turning out to be a bit of a black hole, right? But it is extremely possible that the Sensex could surpass the 1 lakh mark in the next 5 years itself. That's the word coming in from Chris Wood. Here are a slice of his exclusive interaction with Nikunj over the weekend.
You track Sensex more than Nifty, and we've discussed this over several engagements and separate interviews. What, to your mind, is not the probability but the possibility of the Sensex touching 1 lakh in the next 5 years?
1 lakh is
100,000.
Well, I think there's a huge likelihood that yeah.
I want to hear that loudly.
It's very
You
likely.
say that there's a
no. That to me is very reasonable. Yeah, very very easy to see.
So Chris Wood is of the view that in the next 5 years, the Sensex...
Let's put it like this. I would be disappointed if the Sensex had not touched 100,000 5 years from now.
Okay, so I'm going to capture and recapture this headline again. You will be disappointed if the Sensex in the next 5 years does not hit 100,000.
Yeah, absolutely.
It can go above 100,000 also.
Well, clearly, yeah. No, I never have IT, but it's not really my area. But no, there's nothing wrong with the IT company. There's an interesting conceptual argument, which I don't know the answer to, which is how will the IT sector cope with AI? I've got, my base case is I'll be able to manage it, but I've got no inside track on that. Personally, right short term, I would favor staple consumers over discretionary consumers, but this is just tactical.
Have you used ChatGPT to write your free greed and fear index?
I will never use ChatGPT, but I've never used Facebook. It doesn't stop Facebook going up a lot. So so ChatGPT is kind of irritating actually, because I was hoping this was, I'm always biased in favor of Asia and emerging markets. So Asia emerging markets were set up to outperform this year if China had come back normally, but this AI story, as soon as ChatGPT happened, is created a narrative for the US tech sector which didn't exist.
The food placed on the table, guess what, has been ordered on Zomato. Yeah. And Zomato is part of your portfolio. I'm wondering why
I've just added Zomato because I've been under pressure to put that in my portfolio since the IPO, but obviously I didn't. But I think now it's in the long run, this is a very straightforward play on Indian consumption, and the total market cap is very small relative to the potential addressable market. And based on what I've been told, only 6% of the Indian population apparently currently pay for things digitally.
So, Chris, there are a couple of last follow-up questions, and I promise I'll not extend our appointment beyond that. Last 12 to 18 months, we've been in a cycle of interest rate hike globally and locally, and typically when that happens, hard assets do well. Growth stocks, they underperform. Now perhaps we could be in reverse of that. So do you think globally growth stocks could make a comeback? Guess what? I mean, you've got Nvidia, which has already become $1 trillion company.
No, but Nvidia is different, you see. So I put Nvidia in my global portfolio when I realized this GB chat story, because in this, we don't know which form of AI will really take off. So what you want to try and own is the picks and shovels of AI. And apparently it seems to be the case that people need Nvidia's GPUs to do AI. So that explains why. And basically, the tech sector, as I was saying, now has a new story, because first quarter people were buying all the semiconductor stocks before, on the argument that the demand's recovering, but actually all the demand estimates for PCs, smartphones, and regular servers are still going down. So this whole GB chat has just created a new narrative, and you have a spectre of unlimited growth. So that gives a story back to the tech sector.
It's May 2023, but hypothetically, if I take the clock forward to May 2028, and we are having the same chart ordered on the Zomato, and I still have the Greed and Fear newsletter in my hand, what do you think potentially 5 years from now we could be discussing?
5 years from now, we'll be discussing, we might be concerned that the banks and property cycle is peaking.
Okay.
Yeah. But then the other key issue was whether all this promise of made in India has actually become a reality. because the production will either be moved to India or it won't have been. At the moment, this is very early days, but there's promising signs. And then the other question is just this whole, tax revenues growing as a percentage of GDP and the whole economy becoming more formalized. Has there been more progress on that front?
All right, let's talk market technicals, and to do that, no, we'll not talk technical. We want to talk cricket. That is what Quran wants to tell us. Are you wearing yellow on purpose because you were supporting CSK? So that's not the yellow CSK team's yellow, no? That's a different yellow.
Yellow is yellow.
Yellow is yellow. Okay,
Yellow
Kunal.
is yellow.
Yellow is yellow.
There is no dark yellow, there is no light yellow.
You actually saw the match last evening?
Yes.
At 10 o'clock, I logged out. I mean, I said, started raining. I said, it's not happening. Let's go to sleep. Be a good boy. You have to reach early morning to work. And in the morning, my son only told me, Papa, CSK has won.
No regrets for staying up and watching that match, right, Kunal?
Absolutely. I think it ended at 1:30 or 2 o'clock in the night.
Duty calls, Kunal. I like that commitment. You watched the match, early morning you are up. I was hoping you should have been in the studio then.
No, actually, I'm out of Mumbai.
Sources tell me you're in Ahmedabad.
Very close to Motera.
Okay, how market's looking? Who will have the final call? Who will have the final laugh today?
So I think it's going to be bulls, all through the way, Nikunj, because over the last 1 week we've been discussing that the indices were due for a breakout. It was just because of the May expiry, the previous expiry, that the markets were having a lot of resistance because of the way option writers they managed to write the positions. But I think start of the June series, I think we started off the Friday's trading also on a very strong wicket for the indices, and yesterday's gap up move was just an indication that how strong the momentum is for the index. The most interesting part which I liked about the market yesterday is that at closing basis, even though the FI numbers were very strong and positive, there was hardly any change in the open interest data. So only 0.5% positive for Nifty and I think 0.8% negative for Bank Nifty. So that itself tells you that people are not too much enthused about buying this kind of momentum, but they are waiting to buy or add on dips for the indices. And I think that's the pattern which you've seen last expiry specifically. The rollovers were extremely good, and that is playing an effect on the markets currently. So we have surpassed two resistances, 18,400 on the Nifty very clearly, and on the Bank Nifty we've now broken past about the 44,000 mark.
Let's get in a view then from you, Naresh. Don't know if you caught the cricket match, but you're certainly catching those market levels as we're perched close to all-time highs on the Nifty Bank. And what are you looking at on the frontline index?
Well, I know for sure he was supporting Chennai. That's what he bet on during the closing show yesterday. But yeah, Naresh, go ahead.
So finally a good send-off for CSK yet again. So the joke continues that everyone plays CSK in the final. So for now in the markets also we are seeing a momentum to continue. The view remains the same. 18,800, 900 is the next pause. And the best way to ride this trend has been to continue to hold on to the long positions and continue to expect some bit of pauses around the resistance levels. So 18,800, 900, that is the point of time where you take a little bit of a cautious call. Till that point of time, you continue to ride onto the move. We are seeing new leadership coming in. So we are seeing some names in the heavyweights also trying to make a move. So we've seen IT do a bounce back. We are trying to see some bit of a recovery in Reliance Industries. We're trying to see even a Kotak Mahindra Bank make a move. So the only one left is the HDFC Twins. If that happens, we go much more easily towards the all-time high. And if we look at the broader indices, they've continued to do as well. So mid cap 100 has hit a new high. Some more indices have hit a new 52-week high and an all-time high. So overall, the trend is positive. The Bank Nifty is at an all-time high without the largest weight being at an all-time high. So we still have a lot of catch-up to be done by HDFC Bank. But apart from that, the trend remains positive. So maintain a hold on the indices. And once we reach 18,800, 900, we should see more action shift towards the mid caps and the small caps. And over the next two sessions, we'll see the earnings season to get over also, and then we'll start seeing more action on the broader markets.
Okay, let's find out then what those stock-specific strategies are from our chartists. And Kunal, what is it that's looking good today?
So, I'll mix mid caps and large caps. And from the mid cap end, it is IDFC First Bank. I think it's an exceptional chart in the making. The stock has crossed the levels of 70. It's already trading at a multi-week, multi-month high. Extremely strong momentum. Very good rollovers for IDFC First Bank, and we saw the stock going into a strong short covering spree as well post the May expiry. So all of that augurs quite well for the stock. Would suggest a buy 78 as an immediate target. Stop loss could be tailed to 66. Reliance Industries is the other stock. The stock has clearly broken past above its key moving averages, 2,500 as a strong psychological level, and completed a swing breakout for itself on the daily charts. So would suggest a buy, upping my targets from earlier given levels of 2,550 to now 2,650. Traders could look at a fresh buy even at current levels and keep trailing stop loss of 2,470.
Right. Naresh, what about your stock ideas?
So first is a buy on Hero MotoCorp. The stock has shown good amount of relative strength over the last 1 month or so. Technically, over the long run, it is setting up for a big breakout. So the last 10 years, 12-year return has not been great. The stock is almost used to be at 2,500 10 years back, is at 2,700. Now, if we look at the price action, the short-term charts have given a breakout, a flag breakout. A bigger breakout comes into place above the 2,900 mark. So we're now expecting a move towards this 2,900, 3,000 mark over the next few sessions, a stop loss at 2,730. Second is a buy on Tata Power. The stock has spent almost 12 to 18 months in a corrective mode. Went down from 260 to 80 levels all the way to 180, 200. Over the last 4 to 6 months, it was in the range of 180, 200 on the downside and 215 on the upside. Yesterday, finally, the stock has broken out above the 215 mark with decent volumes. So this gives a range breakout, a short-term target price of 245 and a stop loss at 208.
Okay, there you have it, all your top technical recommendations from our chartists. Let's shift focus then and focus in on stocks and news. FMCG major HUL came out with their annual report highlights. They've shared that they've seen 9 consecutive quarters of double-digit underlying sales growth. What are some of the other key developments in the annual report? We've got Vinny here to take us through the details. Vinny?
Good morning, and we'll talk about just the financial performance first. Obviously, 9 consecutive quarters of double-digit sales, underlying sales growth is what the company has seen. They're highlighting that they have continued to gain market share, and in more than 75% of their profile and product profile and business, they have managed to gain market share both in value as well as volume terms as well. They are continuing to gain in value and volume also in their tea business, where they are a market leader and continue to hold that position. Let's move on and talk about what they're highlighting in terms of demand trends coming in. Yes, there is clear pressure in terms of demand trends, what they highlighted in terms of a slowdown, which was more pronounced in the rural markets. We know that urban markets, that was something that was leading the growth for the FMCG space, while the company highlights that, given the trend of urbanization, more focus in terms of nuclear families as well as rising affluence is something that could bolster the growth for the company going forward, especially in the premium segment as well as the new demand spaces where they see coming in as well. ONDC, in terms of the commentary, they have come in there that they are the first FMCG player to actually participate on the ONDC app, which is a government's initiative, and they believe that this could give them a furthermore opportunity in increasing and reaching more consumers as well as customers. In our trade channel, an update on that front, they said that the traditional trade, now that's seen a resurgence coming in, and kiranas are coming back on the forefront in terms of growth going forward as well. The company is planning to invest a bit more in terms of route to market strategy as well as in terms of in-store execution, especially in the pharma and the beauty channels over there. outlook in terms of growth going forward. Near term, they believe the operating environment maybe could be a bit subdued and could remain volatile given the current macro environment, as well as they expect that the price volume growth will start seeing a rebalance, expect volumes to recover gradually given that the consumer habits will start improving going forward. The company will continue to focus in terms of driving the saving habits and driving savings and reducing costs across the P&L portfolio, and are committed to a mid to long-term guidance in terms of double-digit EPS growth as well.
Right, Vinny, we leave it at that. And the paint sector as well is on the brokerage radar. Asian Paints conducted a management meet. What are the key takeaways? Which companies are the brokerages bullish on from within the paint sector? Lisa is here with the update. Lisa?
Yes, so almost all the paint companies are out with their earnings, and on that front, Morgan Stanley, they have come out with a review report on the paint segment. So here are the important insights. Asian Paints will be pursuing an aggressive growth strategy, while Berger Paints, they are expecting to see the fastest decorative growth ahead of its peers, and also looking to gain market share gains in FY24. Concise decorative growth that has narrowed down versus its peers. Also, Akzo Nobel, which is currently the 4th largest player, they are aspiring to become the 3rd largest player in the country. Indigo Paint is also aspiring to grow at 1.5 to 2 times of the industry growth, and Grasim, which is the new entrant, which is expected to see a disruption in the paint segment, they announced that they are on track to complete the commercial launch by Q4 FY24. Now, apart from that, JP Morgan met up with the Asian Paints at the management. They reiterated and maintained their stance of achieving a double-digit growth in the near term, which will be mostly volume-led. And they also said that they have reiterated their 18 to 20% EBITDA margin guidance over the near term. They recently entered into the home decor segment, and they are targeting 8 to 10% revenue contribution by FY26. And they also highlighted that they need to stay competitive, and for that they will be furthering their investments to widen their portfolio and also to reach for more customer reach. So that was on the paint segment, and the paint companies will be in focus on the back of these reports.
They sure will. Thanks very much for giving us all of those details on the paint sector and that latest brokerage note. Well, let's move right on then. In other important news that we're tracking, sources suggest that American auto major Tesla, along with other companies, have expressed interest over India's lithium reserves auction. My colleague Aishwarya Patil joins in with the details. Aishwarya, what are you picking up?
That's correct. We've learned from sources that a couple of players, both Indian and international, have shown interest towards the lithium reserves that will be thrown open for auctioning by the end of this year. In fact, Tesla has shown interest in participating in India's auctioning of lithium reserves. Apart from Tesla, players like Ola Electric, Mitsubishi are one of the front runners in this mining and auctioning of lithium reserves. These players will soon will be seen among the top domestic and international players bidding for the rights of mining lithium at Jammu and Kashmir. Now, remember that earlier India had found massive lithium reserves of 5.9 million tons in the Salal Hemana area district area of Jammu and Kashmir, and post that we also found large quantities of lithium reserves at Devangana Revant Hill in Rajasthan. Now, why are these mines really crucial? Well, for the EV players, it's absolutely important and will also reduce the imports of lithium that we have been doing for all these years. It is believed that these reserves put together could cater to almost 80% of India's total lithium demand. And exploration, of course, of these lithium reserves is critical for rechargeable batteries. It is a key milestone in achieving India's future in EV manufacturing as well as EV adoption.
Okay, we leave it at that, Aishwarya. Thanks much for that exclusive info. But we at Times Network are back with a flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda. As we move forward on the path of integrated equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just the Indian economy, but the global one as well, To pursue this agenda, the theme for this year is India, the emerging third superpower. India Economic Conclave will feature the biggest voices from politics, global markets, economy, and the corporate world. So get ready to catch all the action right here on the Times Network.
Back with the markets, let's take it straight then to all the stocks that will be in the spotlight. Suntec Realty from the mid-cap space as well as Soba. They will be in focus on the back of the management conference calls as well as the kind of future commentary guidance that they've given. Let's take it across then to my colleague Vamakshi. She joins in with all those key takeaways. Vamakshi?
Well, yes, let's start off with Suntec Realty. Now, in the conference call, the management highlighted that there was a delay in launching the Mira Road project, which in turn led to the company missing its FY23 pre-sales guidance. The management is, however, expecting traction to improve going ahead for their BKC projects, and for FY24, they've guided for around 20 to 25% of pre-sales growth. Now, moving on to Soba, a good set of numbers that came in from this counter and very strong commentary that is coming in from the management. They believe that they're targeting around 15 to 20% pre-sales growth in FY24. In fact, they're planning to launch around 7 to 8 million square feet projects in FY24, and this is against the 4 million square feet that the company launched in FY23. In fact, they're expecting to sustain a similar rate going into FY25 as well. They're expecting the debt levels to come down further, and the management is factoring in only inflationary growth in the pricing. They believe that they will continue to witness margin pressure going ahead. Contractual business, the margin pressure is expected to sustain for a quarter, while for the residential segment, the margin pressure is expected to sustain for the next 2 to 3 quarters. But nevertheless, they believe that the residential EBITDA margin is expected to improve over 15% and PAT margin will be in double digits. So largely that is the commentary that came in from the management of Soba as well as Suntec Realty.
A couple of stocks which are also going to be in focus on the back of management conference calls and commentary and future guidance. Ashesha is here with all the key takeaways from those. Ashesha?
Well, yes, first let's start off with Repco Home Finance then. The stock was buzzing yesterday on the back of its results, but the management has gone ahead and reduced their FY24 guidance. As far as AUM growth is concerned, they've now guided for a growth of about 12% versus their earlier guidance of 15%. As far as disbursements are concerned, they expect FY24 disbursements to grow at 20% versus their earlier guidance of 25%. Margins, meanwhile, which came in at about 5.2% in the fourth quarter, they expect margins to achieve steady state of 4.8% going forward, and they say that they've already passed on the impact of purchase cost increases to their customers. Maharashtra, Gujarat and Kerala, they believe could achieve turnaround in FY24, and they expect to open 10 new branches in FY24. Let's move on to Avalon Tech then. Over here, management commentary is quite positive. They're confident of growing at 25 to 30% in FY24 with margins in the range of 12 to 13%. They expect revenues to double over a period of next 3 years. They say that they are seeing a lot of traction in the aviation space, in the aerospace. They got first set of purchase orders already in this particular sector, and they believe that this sector is expected to grow and it will help the company grow over the next 3 to 5 year period. Exports, meanwhile, are sluggish for Avalon Tech, and they believe this is because of inflationary pressure in the United States. All in all, strong commentary that has come in from Avalon Tech today.
Very much, Ashesha, for those details. Let's move right on then to top fundamental stock ideas. Listen in to what Sanjeev Bhasin of IIFL Securities is looking at.
On auto, I am very bullish on Maruti, and I'm extremely positive on some of the OEMs like Bosch, which has been a big outperformer. But Maruti, Hero Moto is my dark horse. You know what Tata Motor has done in the last 6 months, I think then this year will belong to Hero Moto, given that rural incomes and two-wheelers are seeing a lot of traction. Out of every 4 motorcycles charged on EVs, 3 are Hero Moto, and it's not a very well known fact. So they are gaining market share in EV, which is a small segment in the two-wheeler, but this stock can be a dark horse along with Maruti.
All right, Devin Choksi joins us now. Devin, you're running late. Was it because of the match? Are you bhi yellow pen kar aaye ho? Everybody's a CSK fan here. I thought you from Gujarat.
Yes, Nikunj, I think we were waiting for CSK to blast yesterday. I think it didn't happen actually. So
So nobody supports Gujarat, is it?
No, I do support Gujarat, and we enjoyed the batting of Gujarat. So certainly, I think it was a great match yesterday.
So I will only buy Gujarat stocks. I will not suppose the Gujarat team, right? Right. Okay, let's start markets, David. Do you think we're on course to make a new high and stay above that new high?
Well, I think the fabric is set as I see it. On one side, the corporate results have come up very well. The guidance for the current year, I think, is reasonably good, even except the commodity segment where the certainty is not around. But a good news for the consumption of commodity is very high because the cost of commodity remains lower, both industrial commodity as well as the food grade commodities. In such situation, we are likely to see relatively better margin performance from the companies which are consuming commodities. And that would include the likes of autos, the auto ancillaries, even FMCG companies, and so on and so forth. But it may not be so great news for the commodity producers per se. However, I think they may probably stabilize on the margin front maybe after a quarter or two. So I would think that current financial year looks, I think, reasonably set for growth, including the IT, which was a suspect at the end of the last quarter of the last financial year. I think the IT is showing the distinct signs of growing and growth. I think they are likely to record. So there also we remain reasonably more confident. And the banking credit is also reasonably good, I think, as far as the corporate side is concerned, housing finance side is concerned, and the retail side is concerned. So overall, if you look at the sectors, I think more or less all the sectors are showing the signs of growth, and that's why I said the fabric is set. Fortunately, I think the global funds have also started coming into the market, and that is keeping the market stable at this point of time. So maybe if market runs up ahead of time, then you might see corrections of some degree. But otherwise, I think we should see the gradual upside in the market going forward.
Right. Devin, the one space which is really springing up is the entire realty pack. We had Chris Wood as well on, in the office on Sunday evening talking about how he's extremely bullish on realty. And I just want to take a leaf from what Shobha delivered. FY24 pre-sales growth, they've given a guidance of a solid 15 to 20%. Fair amount of buoyancy as well within the entire realty pack. Any stocks that you like here to buy afresh right now?
Good morning, Ash. Well, I think most of the companies are showing reasonably good size of the projects and the execution thereafter. Fortunately, I think the inventories are not remaining with the companies for a longer period of time. Moment they see the tractions, I think they are already having seen the bookings are completed for many of the companies. At least I think in the metros, we are experiencing this trend. So where the affordable housing business is there in the smaller cities, there too one is experiencing the higher amount of bookings coming from the customers. And that is getting validated also from the housing finance companies which are growing the loan book by about 20% or so. So overall, housing finance as a housing sector as a space, and I think housing finance along with, they remain reasonably good on the track as far as the growth is concerned. Now, whether one would buy any of these companies immediately, my preference has always remained with housing finance companies, largely because of the fact that if one has to grow steadily in his investment, then probably 20% rate of kind of CAGR growth, which is promised by the housing finance companies, is reasonably good compared to the real estate companies per se, who may have their ups and downs in the respective quarters, and so would be the impact on the prices. So we remain reasonably more overweight on the housing finance space within the real estate sector.
All right, Devain, stay on with us. Maybe you'd like to discuss some of the stocks on the editor's radar. So first, let's get in Nikunj's take. Let's discuss then the NBFCs and Reliance Industries. Begin by talking about RIL. We discussed it at the get-go as well, the kind of underperformance at a time when we're looking at life highs. It has a healthy weightage of 10% plus on the index. In the last 6 months has declined about 8%. What's driving this underperformance?
It's a stark underperformance. It's rare that when markets are making a comeback, when ETF flows are there, Reliance underperforms in such a stark manner. Why is Reliance underperforming? And I think markets, I guess, are overestimating the impact what will happen because of the slowdown in their old economy, stroke their chemical, petrochemical, as well as their entire auto business. I think it's fair to assume that the China demand is not there. It is fair to assume that GRMs are not that strong. It is fair to assume that the cash flow would be impacted, and when the going was good, the windfall gain in a sense was put. As a result, they were not really able to benefit out of the cycle. But I guess somewhere markets are overestimating the impact of global slowdown in the chemical business, and markets are underestimating the strength which now is there in the retail business and some of the other businesses. I think the retail business is firing full cylinder. Geo business has stabilized. The green hydro business, the capex cycle it's right on its way. They do not have a debt issue now. Cash flows are improving. So I think it's a matter of time someone would come and say, aha, how come Reliance is underperforming? See, it's an institutional dominated stock. So institutional activity only will have an impact on how the near-term direction for Reliance is going to move. But my limited point is that the underperformance in such a vibrant market is very stark, and it is a matter of time someone will recognize that somewhere this is an opportunity, not something which you can ignore for long.
Okay, so that's RIL for you discussing the underperformance. Let's move on to NBFCs, and it's been anything but underperformance. Pretty decent year-to-date moves that you've seen across the board from some of these names. Valuations as well reasonable, and more importantly, Nikunj, the commentary has been strong.
I like this space. I think we've been talking about it, and I think there is still some more steam left. You can be specific in terms of what a Chola has to offer versus what a Poonawalla FinCorp has to offer in terms of the profiles. Look, NBFCs cannot be compared as one homogeneous basket where everything just goes up in a hurry. But in general, there's one thing which I've seen over the years which works for an NBFCs is that in a rising interest rate environment, they underperform. In a falling interest rate environment, they always tend to outperform. That's largely because NBFCs, they borrow from the wholesale market. When you're borrowing from the wholesale market, the cost of capital, which is the basic raw material, that direction really matters. Given that RBI has hit a pause, I think it's a pivot. Interest rates are not going to go higher. If interest rates are not going to go higher, bond yields have come down, the wholesale market liquidity will ensure that the cost of capital for NBFCs will remain strong. Then you have to get into specifics. Which one is in vehicle finance, where things are moving in terms of the rural play, where things are moving in terms of the car finance. That's a judgment call. But in general, I guess NBFCs could exactly do what banks did in last 1 year, in next 6 months. So if you're looking at an outperformance, it's going to be large corporate banks. It may not be small PSU banks, but it will certainly be a lot of NBFC names.
Okay, that's the view coming in. Stocks on the editor's radar, Aisha. Perhaps we'll get in Deven's view as well on some of these candidates.
Oh yeah, absolutely. How can we not take his opinion on Reliance? Deven, what to your mind is going to snap Reliance's underperformance?
Well, I think largely the market has been experiencing the participation in last 1 and 2 months from the foreign investors, and that has probably gone into the side stocks more than getting into the mainline stocks. My reading said that the fundamentals of the company remains absolutely strong and very convincing. The consumer businesses like Jio and the retail, both of them are growing at a steady pace of growth, and which is fundamentally very good, because those businesses, when they start moving at an exponential pace, then probably I think you might see a situation of some kind of degrowth in subsequent period. But I think here the company is growing very steadily at around 15 to 20% growth in the respective space, retail and the Jio. So I find that I think it's a very steady growth continuing. At the same time, with the 5G rollout and the wireline connectivity improving for Jio, I would think that I think the higher amount of business is expected to come up in the coming quarters and so forth. So I remain positive about the consumer-facing business. And at the same time, the industrial business, both refining and petrochemical, they again, I think, grow at a steady pace of growth. They have taken the full advantage of the lower crude oil prices last year, and they continue to do so even in the current year. I believe that I think the company would continue to produce a relatively steady set of growth. Maybe 23, 24, you are also going to see some amount of progress on the renewable segment of business, where the company has started showing some amount of progress on the implementation side. I would think that I think somewhere in the end of the financial year, we will be seeing some higher amount of things coming in. Something ahead of that, maybe I think you should see the actions happening in the market and the accumulations also happening in the portfolios.
Here's the word coming in then from Dipan Mehta. Let's get his fundamental take on what he's liking within the entire new age tech space.
More and more, I am seeing the way these new age platform companies are shaping up. Certainly, there is no disappointment on the growth front. I mean, they are following through a plan. Their growth rates have been good across the board. They are making very strong efforts to get into EBITDA positive and then start to declare very high cash profits as well. But I think that still seems to be a few quarters away. We are approaching these companies just as you buy options, and with a very longer term view, like 5-10 years or so. The likes of Zomato, Policy Bazaar, Nykaa, Paytm, these are stocks of the decade of 2030s, and they could be huge multi-baggers over the next 7-8 years or so. But they have this investment phase which they are in, which is reflected in their P&L. So I think you will have trading rallies in them from time to time as there is positive news flow. But for them to deliver sustained, returns, significant outperformance over their peer group or other mid-cap stocks, that may take a while. But on the whole, I think the performance and the environment and the overall, build up of the stock, especially Zomato, looks quite good. And it's a duopoly, and certainly I think at some point in time they'll have the benefit of that.
I'm going to go back to some stocks where price action has been quite encouraging. And one stock, Nuresh, which has done exceedingly well in last couple of days is Praj. What is your understanding?
Saw this move post the results. But overall, the momentum has not been as great as it was expected. So the stock has moved just like the sugar space, not really seeing an outperformance per se. So the stock fell from 450 plus levels to 300. Now it has made a slow and steady comeback. And it has spent 2 years in this consolidation, 300 on the downside, 450 on the upside. So again, we are still part of that same consolidation. So after this move, price and volume breakout in the last 2 sessions, I would expect we go towards the 450 mark slowly and steadily. Would be looking at it as a buy on dips going forward.
I'm going to turn and go back to Tata Steel, and it's gone below the 200 DMA. Tata Power, it's gone above the 200 DMA. Devan, why are steel stocks doing reasonably well? I mean, the demand for steel is not that strong. I mean, we know that China is no longer guzzling. We know that they have a surplus capacity. We know that Russian steel is back in the market. Yet, a stock like Tata Steel actually has done rather well for itself.
My understanding is India is an economy which is basically spending heavily on building the infrastructure, and that's a roadmap that the government has set for 10 years. So obvious it is that I think in current scenario, the metal consumption India specific metal consumption I think would remain higher. Be it construction activity, be it infrastructure activity, be it consumer products activity. Everywhere, I think the metal requirement would be on a higher side, and the steel would be definitely, I think, in a higher demand going forward as well. However, I think the influence of the China steel prices definitely, I think, keeps everything under control. And in between, in the last year, we also saw some very ugly surprises on the fuel prices, energy prices, as a result of which I think the margins and everything also had come under pressure. But I would think the demand scenario would remain intact. I would see if the crude oil prices remain stable, then the margin scenario also should remain intact. And India-specific demand scenario would continue to grow well, as my reading says. So maybe I'm not a very big fan of buying commodities because commodity assumes I think bigger amount of cycles. But I feel that I think on a given opportunity, corrected prices, I think if the stocks are available in the course of its state journey, probably I think one could buy them at lows.
Another stock which I think is worth revisiting, Deven, is ICICI Prudential. Now that ICICI Bank has got permission to increase their stake in ICICI Prudential, I mean, this is a couple of years ago, they had to sell their stake, ICICI Lombard, I beg your pardon. ICICI Lombard, they had to sell their stake in ICICI Lombard because they needed capital to run their banking business. Now, they've got permission to increase their stake back in ICICI Lombard, albeit at a higher price, but that is something which would help the stock.
Yeah, I think on the fundamental side of the company, if I look at it, in each of the product vertical in which they are operating, probably I find their strategy quite unique in the non-life insurance space. And that's where I believe that I think this company is having a relatively, I think, sharper edge compared to others in the non-life particularly. you look at, I think, other products, including, I think, the products which are facing consumers, including the motor vehicle loans. I think the strategy that the company has adopted is suggesting that they are physically hitting the sustainable growth path. And that's where I believe that this company remains relatively more strong. So I find fundamental strength in this company quite high. Maybe I think this particular transaction of increasing the stake could possibly result into the stock price remaining firm to higher. That would be a given situation. But I see the sustainability of the business as quite high in this company.
Right. Okay. ICICI Lombard, clearly that was the story in town yesterday. The stock held out by, I think, at the session highs, almost a 10% move there. Kunal, you think this further steam in the stock?
Well, not for ICICI Lombard. I don't sense that it could be a very strong breakout going forward, because the stock has already gone through a surprise move on the upside. So over the last 2-3 months, specifically start of 2023, the stock had been absolutely sideways. So it's been just chugging along the 1100 mark for ICICI Lombard. Yesterday's move was very sudden. The stock sold off at the end of the day, did not close at the high point of the day, and it's still trading up below its crucial moving averages. So I think in that respect, it's not an attractive chart that we could see a follow through. I think my sense would be that the stock should get into a more time-wise correction and probably consolidate at this 1150, 1160 mark for at least another couple of weeks before it gets ready for any kind of an upward move. So I think one should not be in a hurry to buy the stock at current levels just because of yesterday's news flow, because the stock seems to be in a consolidative phase.
Well, ICICI Lombard 1190, we've discussed this one. Let's look at Infosys. Why am I going back to Infosys? Guys, it's trading at 18 times. 18 times trailing with a 3% dividend yield. Is the margin of safety now strong in buying into a stock like Infosys? Devin Choksi, 12% down this year. The guidance was not great. But is the margin of safety strong if you buy Infosys at about 20 times?
Absolutely, I think no doubt in my mind. I think, in fact, when the stock price hit low at that time, also I said it's a contrarian buy in this particular company, largely because of the fact that if one is talking about significant amount of proliferation of the cloud computing, machine learning, and artificial intelligence kind of a programs, I would think that the companies like Infosys, TCS would definitely get significantly large amount of orders from the global market. Maybe in a given situation when the global economy is hitting rough patch in form of some recessionary conditions over there, they may have slightly muted progress on that front. But otherwise, I think they would continue to do well. Given that kind of a strong positioning that these companies are enjoying, I would think that any corrective downside in the stock prices are definitely welcome. And I think that is what we got in the month of February, March this year. I would think that even at current price, as you rightly said, I think the valuation wise, the stock is compelling. Downside risk is protected, margin of safety remains on a higher side. And at the same time, whatever the directions of guidance that they have given, I believe that by the end of the year, I think they would be probably surprising and give relatively better guidance going forward. So I would rather like to buy at a price when it is available, which is, I think, quite attractive at current price.
Some of those paint companies as well, they were in the spotlight today. JP Morgan coming out with their latest report. It's a neutral rating on Asian Paints with a target price at 31.28, and some of the other paint companies as well in the spotlight. Yesterday, we were interacting with the management of Indigo Paints, and they were pretty categorical that they're not worried about competition intensifying within the space and eating up their market share. Your take on this scenario?
So, Avanne, growth in the industry continues. Consumer is spending money. As we talked about earlier about the housing business growing. In my viewpoint, I think with the infrastructure space continuing to grow, with the consumer continuing to spend money, the demand scenario is never in question. In fact, I think other competitors, when they entered into the market, they are unlikely to cause any kind of a margin threat to the existing companies. Companies like Asian Paint, which is well integrated with the input cost, which is, I think, predominant factor, they are well integrated on this particular front as well. So obviously, on one side, they have got the ability to source material at a lower price and keep their margin protected. On the other side, I think higher amount of distribution reach that they have created, that is also giving them a unique proposition. Any new company coming into this particular space, they will have to definitely beat the situation and create the space for themselves in the distribution. And at the same time, I think protecting the margin, which is quite vulnerable due to the volatility of the crude oil prices. in my viewpoint, I think the likes of Asian Paint would continue to do well even the paint business also. And also, I think the other line of activity which they have started, they're showing reasonably good amount of growth as far as I think the home decor business in which they are and they've already entered into. So from that perspective, I would remain comfortable with the likes of Asian Paint, which shows relatively steady amount of growth trajectory hereafter as well.
Kunal Botra's call on Nifty. Kunal, we are almost on the verge of like a breakout, 290 points, 300 points. And Kunal, when markets are getting ready for a breakout, and this is like after a 1.5 year, we are going back to that level. Why is Nifty a hold? Why is that one should not preempt the breakout and load up more positions? Kunal?
No, in fact, one of the reasons why I went on hold is because on just Thursday, we initiated a buy when the index was actually trading in a range. So if you remember, we were discussing this on the expiry day as well, and especially, at the closing that, whether the index would see a breakout post the, expiry. And my opinion was that we should see a breakout above the 18,400 mark immediately at the start of the first couple of days of the fresh series of June. So I think we've seen that already happening for the index. Now we are up almost 200 points, 250 points on the Nifty in just the last couple of days. So I think at this point, it makes a lot of sense to hold on to the positions which we initiated last week. That's exactly one of the reasons why I've given a hold on both the Nifty and Bank Nifty.
Devin Choksi, let's talk Nifty language here. Do you see Nifty touching 20,000 before the year end?
Well, I think on the fundamental strength, yes, definitely. I think it's a good possibility because in 23-24, we are likely to see the earning growth continuing in the vicinity of around 15% above. So certainly, I think that particular situation also suggests that going forward, the discounting would probably move well, and I think the Nifty could possibly move in the direction of 20,000 to 20,000 plus levels. But more importantly, Nikunj, I feel that the way in which I think we are seeing the sustainability of the earning and the growth in the earning in one or another sector, that convinces me more that I think it is a journey which is likely to continue. It's not going to be in previous years. What we have seen is that I think in one particular point of time, the Nifty would peak out and thereafter it will go on the sideways for a longer period of time. Hereafter, the conviction says that the Nifty is likely to remain on a steady repeat and I think on a sustainable basis. I would be more of the view that 23-24, of course, but 24-25 also remains, I think, reasonably promising, given the kind of growth program that we are experiencing from different industries, companies in specific.
Kunal and Naresh, I'm going to ask this question and then we'll talk about it perhaps on a regular basis. Kunal, on a scale of 1 to 10, what are the chances that before the year ends, which is before the calendar year ends, I'm specifying it, Kunal, so that there is no confusion, Nifty will touch 20,000?
Yeah, I would rate it at 9 or 10.
10 on 10 is 100% then?
Yeah, I think there's 100%? A very strong likelihood. I think there's a very strong likelihood, Nikunj.
Naresh, why are you not nodding your head when Kunal is sounding so bullish?
So it's been a problem. So the view has been, okay, we go towards 20,000, but over the last 2 years, we've seen a lot of things happen out of nowhere. So we've seen a Russia-Ukraine crisis come in. We've seen all the things are okay globally and suddenly something comes up. So that's the reason I'll keep it at 8. The trend is still positive and say 20,000 from 18,600 is not even 10%.
Kunal feels it's a 9 on 10 chance that Nifty will touch 20,000 before the year end. Naresh feels it's 8 on 10 chance that Nifty will turn 20,000 before the year ends. And Devin Choksi, what should be your number? 6.5, 7.5, 8.5 or 11 out of 10?
Well, I guess I think whether it happens before the end of the year, calendar year, or
give me
maybe
a number.
it is happening.
Give me a number.
Give
me a number. We all a number, guys. Give me a number. No, what's your gut call? I mean, I'm not going to hold it against you. On a scale of 1 to 10, based on your understanding of the market, Devin Bhai, do you think Nifty will touch 20,000?
I think it is definitely above it, for sure.
I got bullish consensus going. 20,000, here we come. Which is one stock, Naresh, if Nifty has to touch 20,000 out of the 3 underperforming stocks, Infosys, Reliance and HDFC Bank will chip in the maximum.
So I would go with HDFC Bank because that is where say the stock can, a single event can give a 10 to 20% bump up to the stock. We've seen that happen multiple times over the last 1 year, but we've not got clarity. And hopefully that clarity comes in by year end. and the stock is, say, a big underperformer in the banking space. The last 2-year return is 0. So you just need a trigger. The trigger is missing. If the trigger comes in, the stock could surprise on the upside. So I'll go with HDFC Bank.
Okay, fair enough. That's the view coming in. But let's also get in a take, Kunal, from you on some of those breakout shares yesterday. You had something like a Mahindra Life Space, which did very well, and eClerx as well on the charts.
So I'll start with Mahindra Life because I think that's a stock which I think in terms of price volume breakout showed all those classic ingredients breaking past above early levels of 250 for Mahindra Life. The stock making a pattern of higher highs and higher lows. In fact, you look at the charts consistently from 2020 lows when the stock was at I think if I'm not wrong sub 100 rupees. From there on, it's been making a pattern of consistent higher highs and higher lows pattern. Even in the last 4-5 months of price correction for the indices, the stock went into a sideways correction and then moved up higher. eClerx, on the other hand, the stock surprisingly has been a more of a consolidative stock for last 2-3 years. The stock has been trading in a range. I think 2,200 approximately was the previous high for eClerx. The stock making a bottom at 1,250, 1,300 levels, and now only it's showing signs of some sort of reversal. But I would believe that maybe the volume push has entered a bit late for eClerx, so there could be a bit of a correction first before the stock gradually moves into an uptrend. So I think Mahindra Life over here could probably be a better stock to trade for.
All right, Deven, thanks so much for joining in and sharing with us your fundamental outlook on the markets. Let's get in those mid-cap strategies going as well, and let's take a look as to what the view is. The screen is on the pre-open rates right now, 18,600 thereabouts. Do remember, no cues from the US markets as they were closed for trade. Sensex down about 14 points. Mid-cap trading calls then from our guests. Kunal?
So I'll go with a buy on Eveready. I think it's a stock which shows all the classic ingredients of breakouts. So it's broken past about the 200-day moving average yesterday. Swing pattern breakout for the stock. A flag pattern breakout, again, a very strong indicative that the trends are reversing for the stock. So all of those classic ingredients which you've seen for the stock yesterday in terms of the charts would suggest a buy with 360 as an immediate upside for the stock, and stop loss could be kept at 320.
Okay, there you have it. That's Kunal's cracker stock. What about you, Naresh?
So that would be a buy on RBL Bank. The stock has made a sideways consolidation. You could call it a triangle consolidation, which has a breakout of 155 odd levels. The stock has retested the last big breakout at 135, 140, and now is making a comeback. And we've seen the small banking space one by one take that breakout moves. We earlier looked at IDFC First Bank, and now RBL Bank looks setting up for a big breakout going forward. Yesterday was a good price and volume uptick, so expecting this to follow up about 155 levels and give a breakout. Risk reward is pretty interesting out here. A stop loss at 147 and a target price of 175 to start with.
On RBL Bank, that is Naresh's top trade. Let's move on then, and here are some of the other top stories to track. Brushing aside powerful opposition, Turkey's longest-serving leader, Erdogan, has resumed power after Sunday's vote. Over a tweet, the US President Joe Biden said he hoped to work with him on significant global issues as NATO allies. The Russian President Vladimir Putin said that the leader's win in Turkey was, and I quote, the logical result of dedicated work. Meantime, Uganda has passed one of the world's toughest anti-gay laws that calls for life imprisonment for anyone convicted of homosexuality. The Ugandan president has signed the Anti-Homosexuality Act despite widespread condemnation from many Western governments and human rights activists. And soon after reaching clashes hit Manipur, the Union Minister Amit Shah chaired a high-level meeting with the Chief Minister and other ministers and senior officials in Imphal. He will engage in multiple security meetings aimed at evaluating the current situation and devising strategies to restore peace and normalcy. Meantime, Shanghai on Monday recorded its hottest May in 100 years, shattering the previous high by a full degree. That put it a full degree above the old record of 35.7 degrees Celsius, which has been recorded 4 times in the past. And across to the UK, the Prime Minister Rishi Sunak's government is seeking an agreement with supermarkets to voluntarily limit prices on basic food items like bread and milk in order to tackle inflation. Household budgets have also been strained by the surging energy prices, driven by higher partly by the war in Ukraine. All right, as always, it's time for the Khabar on D Street. So let's take a look as to what today's Khabar is. IEX, that's the stock in focus, as very low interest has been witnessed in the Dalmia Group's stake sale in the company. Blocks, we understand, have remained unsold in some attempts. Let's take it across to my colleague Sharad, who joins in with all the Khabar. Sharad?
Well, yes, in focus we are having India Energy Exchange, and what we are gathering from our sources and dealers is that the multiple attempts have been made to sell Dalmia Group's stake in India Energy Exchange, but a lower interest coming in from the buyers. Now it's expected that the deal is expected to go in at a discount rate, and currently Dalmia Group, if you look at it, they are holding almost 15% stake in the company, which is valued at almost 2,080 odd crore rupees. But the question remains is what is ailing India Energy Exchange? An important thing remains is there is an increased competition coming in from HPX, which is also a power exchange, and also market share loss is being reported, and the volumes have also flattened. Importantly, the overhang of this current block sale is actually impacting the stock price also, and the important thing is that the spot rates are very high, and because of that bilateral trades are happening, and that is where the transaction income is also being impacted for India Energy Exchange. Now looking at the stock itself, baking it at the current market price, the volume growth is expected to come in at 20% for FY24 to FY30. As per the estimates, and also do remember the stock itself has been underperforming over the last 1 year, falling almost 20 odd %. And looking at the analyst community also, it's a very even Stevens kind of a situation, with almost 54% of 17 analysts tracking the stock still have buy rating, but the remaining 8 analysts are actually having a sell or a hold rating.
Look at some of the sectors or other stocks which are on Nikunj's radar as well this morning.
It's a stark underperformance. It's rare that when markets are making a comeback, when ETF flows are there, Reliance underperforms in such a stark manner. Why is Reliance underperforming? And I think markets, I guess, are overestimating the impact what will happen because of the slowdown in their old economy, stroke their chemical, petrochemical, as well as their entire, O2 business. I think it's fair to assume that the China demand is not there. It is fair to assume that GRMs are not that strong. It is fair to assume that the cash flow would be impacted, and when the going was good, the windfall gain in a sense was put. As a result, they were not really able to benefit out of the cycle. But I guess somewhere markets are overestimating the impact of global slowdown in the chemical business, and markets are underestimating the strength which now is there in the retail business and some of the other businesses. I think the retail business is firing full cylinder. Geo business has stabilized. The green hydro business, the capex cycle it's right on its way. They do not have a debt issue now. Cash flows are improving. So I think it's a matter of time someone would come and say, aha, how come Reliance is underperforming? See, it's an institutional dominated stock. So institutional activity only will have an impact on how the near-term direction for Reliance is going to move. But my limited point is that the underperformance in such a vibrant market is very stark, and it is a matter of time someone will recognize that somewhere this is an opportunity, not something which you can ignore for long.
Okay.
Okay, so that's RIL for you discussing the underperformance. Let's move on to NBFCs, and it's been anything but underperformance. Pretty decent year-to-date moves that you've seen across the board from some of these names. Valuations as well reasonable, and more importantly, Nikunj, the commentary has been strong.
I like this space. I think we've been talking about it, and I think there is still some more steam left. You can be specific in terms of what a Chola has to offer versus what a Poonawalla FinCorp has to offer in terms of the profiles. Look, NBFCs cannot be compared as one homogeneous basket where everything just goes up in a hurry. But in general, there is one thing which I have seen over the years which works for an NBFCs is that in a rising interest rate environment, they underperform. In a falling interest rate environment, they always tend to outperform. That's largely because NBFCs, they borrow from the wholesale market. When you're borrowing from the wholesale market, the cost of capital, which is the basic raw material, that direction really matters. Given that RBI has hit a pause, I think it's a pivot. Interest rates are not going to go higher. If interest rates are not going to go higher, bond yields have come down, the wholesale market liquidity will ensure that the cost of capital for NBFCs will remain strong. Then you have to get into specifics. You know, which one is in vehicle finance, where things are moving in terms of the rural play, where things are moving in terms of the car finance. That's a judgment call. But in general, I guess NBFCs could exactly do what banks did in last 1 year, in next 6 months. So if you're looking at an outperformance, it's going to be large corporate banks. It may not be small PSU banks, but it will certainly be a lot of NBFC names.
All right, that's the editor's take. Let's move right on and find out what the index calls are this morning from our chartists and take a look as to what they're advocating. Well, it looks like it's a consensus call this morning, so a whole recommendation coming in across the board from Naresh Kunal as well as Kush Bora. That's exactly what the market moodometer reflects. Let's move on then to the Nifty Bank Index. After scaling those life highs, it looks like it's a hold call. That's what all three of our chartists are recommending.
Okay, seems like it's going to be a tempered one, at least the start today. Let's see where we scale it up from there. Remember, there was no US equity market handover. US equity markets were closed yesterday. Pretty much all of Asia as well is just very, dragging its feet really. A bit of a mixed bag. While Japan, Hong Kong, Shanghai actually are down, Korea is holding up, and flat for Australia, flat for us, at least what the pre-open rates have settled in at. So let's see which way we actually head. But Kunal, you think the leadership will come in from banks once again? And you think there will be broader participation in this next leg of the rally if it were to be?
Well, yes, Aisha. In fact, the last couple of days, we've seen that happening for many of the banking names, private sector banking names, like HDFC Bank, I think yesterday and day before showed a very good recovery from the sub 1600 levels. We've seen, the likes of IDFC First Bank from the mid-cap end doing pretty well. SBI, I think a stock which had done exceptionally well in the entire 2021-22, was one of the forefront leaders for the entire PSU banking stock. That stock, that's come back towards closer to the 600 mark. So I think there's a strong mix of large caps and mid caps, which have been earlier performers or which have been underperformers. These stocks are making a very strong comeback for themselves. And I think that's a very strong ingredient for the markets and for the banking index to move up higher. So, look at it this way, that the bank Nifty's made an all-time high level with most of the large cap private sector banking names like IndusInd Bank and HDFC Bank, etc. These stocks are nowhere close to their previous 52-week highs or life highs. So that itself tells you the kind of mix the bank Nifty is already shown. So bullish on the entire banking index, and would expect many of these sectors like banks, autos, etc. to keep on participating on the upside.
First rates, 8 points higher for the Nifty, less than 300 points for an all-time high. A number at the beginning of the year looked like a tall climb for us. Now is like kissing distance away. That's the beauty of markets, right? Just when you expect it will not go down, it just something goes wrong somewhere and just the tumble effect starts. When you expect that it will be a very steep climb, the comeback stuns you. Markets are about surprises. It's about understanding how risk, reward, freed, fear and greed it moves. 17 seconds to go. You want one of the heavyweights to fire if markets have to touch a new high and then sustain at a new high, which is either Reliance, HDFC Bank or Infosys. I would say it would be Reliance or HDFC Bank, given that we are now almost close to the merger deadline. Basic approvals are in place, and that is what I think markets should be focusing on now. First rates any second will just come up on your screen now, and it's a flat start. For index which were showing signs of momentum, there is very little activity, both for the Nifty and for the Sensex and for the Bank Nifty. Bank Nifty made a new high yesterday. Nothing big in terms of a fall-up, I think, is there. The advanced decline ratio, 1:3, which is looking promising. So it's a promising start for the market breadth as well. You don't have too many newsmakers, but you want to start with Reliance, HDFC Bank and Infosys just to establish that is money coming back in some of these heavyweights. I'm afraid not. Reliance is flat. HDFC Bank is flat. And Infosys also is flat. Bajaj Finance has done exceedingly well in this market comeback. So FIIs have bought Bajaj Finance, they've not bought into, for some strange reason, HDFC Bank, and that is the one where I think our performance really continues. Asha?
Right. Okay, in the meantime, some of the other stocks which are going to be reacting to their earnings. IRCTC, there's been a 2 rupee dividend that they've announced, 100% that is. But the internet ticketing revenues have come in flat and there's been an EBIT decline as well. IRCTC down about 2%. Recall 2 years back, this was one of the most haloed and fancied and frenzied stocks. RVNL as well. So I just want to basically, bring up that entire cluster of the railway names because even RVNL, the profits have slipped about 5% on a year-on-year basis. EBITDA 2 is lower by about 8.3% and RVNL 2 is down about 3% as we speak right now. A disappointment coming in from Heidelberg Cement as well, from Shriram Properties, Campus Activewear too, wherein the EBITDA is lower by 28% and there's been a fair amount of margin shrinkage as well. Campus will just come up for you on your screens, 4.6% lower for Campus actually. There's also Torrent Power, which has come out with a disappointing set of numbers. On the other hand, good numbers or guidance at least coming in from Shobha Developers. They've they've seen the best ever quarterly sales in the fourth quarter and the net debt is now at an 11-quarter low. Shobha gaps up 7% as we speak right now in trade. NBCC2, the EBITDA has risen 43% and the margin also has seen an expansion of 70 basis points. A good set of earnings coming in there. There's NHPC2, the EBITDA has shot up almost 73%, so a big move for NHPC. Specialty restaurants as well. The margins have risen about 500 basis points. Hikal Logistics, Vijaya Diagnostics, these have all come out with a good set of earnings. Even Stovecraft, we've been talking about as to how this entire urban story of, kitchen upgrades have been playing out. But Stovecraft has not delivered such a great number because it's posted a net loss this time around of 6 crores versus a profit in the same quarter last year. That's gap down 10.5% as we speak right now. This TCNS clothing as well, which has also fallen short of market expectations. It's a loss versus a profit on a year-on-year basis, flat for this stock as we speak right now. And flat for the market as well, but 18,600, so no complaints really. Kunal, any individual stocks that you're punching trades on?
Well, that will be IDFC First Bank, both in terms of the options as well as in cash. I think it looks very attractive, trading at 70 levels for the IDFC First Bank. Looks very good for a target of 78 over the near term.
Okay, IDFC First Bank getting a thumbs up from Kunal. Naresh, what's the first trade you're punching in?
So that's a buy on Tata Power. The stock has given that range breakout about 215. Could be a start of a move towards 245 to 260. So that's a stock which looks interesting.